PPI come out, and it was higher than expected. Now, what is the PPI? Well, if you come over here to the little file, you click on this, it tells you what the PPI is, the change in the price of finished goods and services sold by producers, excluding food and energy. So this is the producer price index. This one, it just says since it's above the forecast, this is saying that things are costing more to produce, costing more to manufacture and everything else. Why is this important? If it's costing more to produce, the goods are costing more. This is inflation, and this is what the government is trying to battle against. We don't want inflation. We want the inflation to come down. Well, how do we do that? Well, we stop buying. So this is all supply and demand. So I'm going to show you this part right here. This is the core CPI. Come over here to the little folder, and then it tells you this is the food and energy prices account for about a quarter of the CPI, but they tend to be very volatile and distort the underlying trend. The Federal Open Market Committee usually pays more attention to the core data, and that's what this one is, the core CPI. So do traders. Now, why is this important to traders? Well, I love this because it actually tells you consumer prices account for a majority of overall inflation. Everything is tied to inflation. Inflation is important because rising prices lead to the central banks to rise the interest rates. Out of respect for their inflation containment mandate. So if price is going up, in which, it increases the inflation, the banks have to increase their interest rates. So it's just hurting the people more and more. Now, what helps with inflation? Well, when we have, let's bring this up, when we have the unemployment, let's go over here to the folder. Now for this, why is this important to the traders? Although it's generally viewed as a lagging indicator, the number of unemployed people is an important signal of overall economic health because consumer spending is highly correlated with labor market conditions. In order to reduce inflation, we need the unemployment rate to go up. Why? Cause and effect. Because right now, even though the inflation is going up, people are still willing to buy. They're still willing to pay all these prices at a higher price, maybe getting further into debt, but they're still paying it. Now, if the unemployment rate goes up, well, now you're not going to be buying all this stuff. You're not be going on vacations. You're not going to be, buying a living room set when your set is okay and you can deal with it a little bit longer. Because of that, it just kind of trickles up. So if you're not buying from the department stores, from the furniture stores, from the vacation places, well, if that comes down, well, then they don't need the employees. They can cut the hours, so now instead of full-time with full-time benefits and everything else, well, now they may reduce it to part-time. Now, granted, this kind of like going to the extreme, but this is how it correlates. So now instead of doing full-time, now they do part-time. Or if you're part-time, maybe instead of doing 4 days, maybe they'll do it for 1 day. Maybe they'll need you 1 or 2 days, or maybe they don't need you at all. The spending for that business has been reduced so much that they don't need you. They'll put you on the callback list. So now you are unemployed. Because you're unemployed, well, now you can't buy all these things. So it's just a cycle. So this is how everything correlates with each other. The PPI is important. This is saying inflation is up. The core CPI it's funny. I mentioned this yesterday, that the core CPI is actually removing coffee from its algorithm, I guess you can say. And I believe coffee went up 89%, if memory serves me correct. It went up 89% in the last 9 months. That's a lot. So what the government is doing is they are saying, whoa, that's going to make our numbers look bad. Let's go ahead and remove it. Let's just remove it. We don't need it. Let's just remove it from the core CPI, and that way our numbers will come out to the forecasted amount. If that happens, then the markets are... Now, if it becomes higher, if it goes higher than expected, then what will happen is like, the economy's not looking good. Let's pull back on our investments and let's just hold our money. So that's going to be bad for the markets. So this is why it's important, and this is why the government is taking out the coffee from the equation. How messed up is that? Oh, we're in debt. Let's just print more money. Oh, we're going to have a bad core CPI. Let's just take out coffee. It's ridiculous. It really is. If you like the content that I provide, make sure to smash the like button, subscribe to the channel if you're not already, and leave me a comment in the comment box. And I'll see you on the next video. And as always, let's make this money.